Look around you, different things born out of truth and passion. Business software, it's our craft, our identity. Thoughtfully engineered, passionately designed to help you transform your business. Zoho, made in India, made for the world.
As head derivatives and technical research at Centrum Brokering. Let me, Nilesh, first let's take a check with regard to the Nifty Bank, please.
Very good afternoon to you. Good afternoon, everyone. Absolutely. So, what a remarkable recovery that we have witnessed today. The Nifty is making an attempt to cross the barrier of 24,800. We are expecting a move beyond that. And as far as short-term levels are concerned, we expect Nifty to move towards 25,000. That's the immediate target that can be seen in next 2 to 3 trading session. The base has already been formed at 24,600, so that should be the stop loss for the long position. And till time it doesn't break below 24,600, we can expect the pullback move to continue towards 24,900 and 25,000 as well. Now coming to Bank Nifty, which is outperforming not only today, but if you see compared to the Nifty index, we have seen an outperformance in the last 2-3 consecutive sessions. It has reclaimed its 21 as well as 50-day moving average. So looking at the overall setup, we expect Bank Nifty to outperform the Nifty index in the October series. And immediate basis, the target on the upside could be somewhere around 56,000. And the base has also shifted higher at 54,500. So that should be the stop loss. Overall, we are slightly of the positive view after today's positive development on the back of short covering that we are witnessing today. So buy and decline should be the strategy.
Buy on dips is the strategy. But Nilesh, we've been largely talking about private sector banks. So what is your take on NBFCs? Because take a look at something like Shriram Finance. That's doing so good. LIC Housing Finance, Muthoot Finance, all of these NBFCs, and particularly the housing finance names, they're doing very well for themselves. Anything that you're spotting on the charts here? Any fresh breakouts?
Absolutely. So we have been bullish on NBFC space, housing finance space as well. So overall, this particular sector is looking positive for the October series. And we have already seen a good development and a good rollover data across all these stocks within this particular space. So Shriram Finance, the target on the upside comes somewhere around 665 to 670. We have already seen a spurt of over 5%. So better strategy would be to buy and decline. Stop loss should be placed at 630. And within this space, the stock that we are liking is L&T Finance Holding. So we have given a buy recommendation in this particular counter. It has been one of the outperformer. It has hit a new record high as well today. We are expecting a further momentum to continue towards 265 to 270 on the upside. Stop loss can be placed somewhere around 250.
Okay, that's the other move, big mover in trade today. The Shriram Finance up 5%. Kunal, you have a view?
Yeah, we discussed this in the morning also.
Yes. Soha Asset Managers joining us this afternoon. Daljeet, a few minutes before we went into break, we spoke about how private banks, or we tried to make a case as to how private banks could be looking attractive over PSUs at this point. Kunal certainly doesn't seem to think so, because we spoke to him about this in the morning. Daljeet, what's the view on the fundamentals? Some of these banks have not moved. Today we've seen a bit of a move, especially on the private banking index, now up 2%, so much more than a bit. Are those set of banks looking interesting at this point? Margin pressure likely to wane from Q3?
Hi, good afternoon. Thank you very much for having me on your show. See, we are positive on the BFSI sector, but not very positive on banks per se. Mainly because one, that in last 2 quarters we've seen that asset qualities, there was pressure in most of the banks. The MFI thing has played out very badly, and then the personal loan, the loans given to the smaller ticket size, 3 lakh, 5 lakh, less than 10 lakh, actually had a lot of issues. So we have been keeping cautious stance on that. And on top of that, when the rate cut cycle starts, the yields start to, or NIMS, margin pressure comes. So like this situation is likely to play for next 1 or 2 quarters more. Therefore, we expect that some of this valuation will become even more attractive. And that time probably we will have to see if there is anything on the banks per se to buy. But on the financial services sector, say NBFCs, power financiers, we are positive. We have some exposure already in one or two names there. Because those are structural stories for those particular segments. So that way we are taking a specific segment call rather than overall broad call.
Right, okay, so that's the take on financials. Daljeet, hi, good afternoon. Any take on pharma now that we have some clarity from the US in terms of what the tariff composition is going to be like? And since most of our players already have physical presence over there, now we have some more light on how tariffs could impact the pharma space. Are you going to be looking at the pharma space once again on the back of this clarity?
We already have good exposure to pharma, 3-4 names. One or two of them are from US and other regulated market exposure, and a couple of them on India market exposure. Now, we have always kept this view in our mind that this tariff thing will probably not impact too much on the actual fundamentals of our pharma companies, mainly because most of these guys are generic players where they don't make 50% margin, they don't make 25% margin. So it is not possible for them to absorb anything. It has to be, if there is any kind of tax, it has to be passed on to the customer. And there is the dependence of the buyer, US, is so much that if they do insist on putting so much of tax, then they will be the ultimate users. So finally, the net result is that most of these companies will be either able to pass on all the losses that will come, or they will not be affected at all. So we have always kept that view in mind, and therefore we have been keeping this exposure alive on all of these companies. In fact, the IPM on the Indian part has been slow in last 2-3 months. We've seen that IPM growth has been slightly muted. But there again, after all these floods in many parts of the country, we've seen so much of floods and all. Post these kind of natural calamities, you tend to see anti-infectives and other kinds of, there is a huge surge in the demand for these. So we are expecting that even domestic growth will be good. And on the international side, not too much to worry.
Okay. Kunal, your picks for this afternoon?
So there'll be two buy calls. The first one, which I would suggest, would be a BAN PNB, Punjab National Bank, from the PSU banking lot. And my sense is that the breakout for the PSU banking stocks should see at least one more leg on the upside, because they are very close towards the breakout of their multi-month, multi-quarter resistances. So I sense that the momentum should come back into many of the PSU banking names. So look out for 119 as a target, stop loss to be kept at 109. And the second would be about Max Financial Services. I think this is a classical breakout or a turnaround. Just about a couple of days back, the stock was retesting its 50-day moving average. Today, with the price up move, it's now come back towards a swing breakout on the daily charts and then taking support at this 50-day moving average. So would look out for targets in the range of 1660. Would suggest a buy with a stop loss at 1600.
Okay. Nilesh, yours for this afternoon?
So I have two buy recommendation. Both the stocks are looking strong on the technical as well as on derivative front. First of all, L&T Finance holding. So we remain constructive on NBFC space, housing finance space from a short-term perspective. So L&T Finance holding, as I already highlighted, the upside target looks open for 265 to 270, and stop loss should be placed at 249. Another stock that's on the long side, that's Fortis Healthcare. If you see on the derivative front, we have seen close to 8% OI buildup, that too at all-time high. So strong long buildup is happening on derivative front. Technically, we have seen a good breakout today. So momentum looks strong in Fortis as well. And on the upside, the target would be somewhere close to around 1020. That's conservative target, followed by 1050. And the stop loss should be placed at 973.
So seems like financials is the clear favor of the market right now. Both our technical experts going with that, and Fortis Health